CPA Paper 13 Revision Class, Earnings per Share, IAS 33, Senior Huntington. Now you should not omit any aspects of earnings per share as they come every sitting. Check past papers from November 2018 up to November 2019. So if you are a CPA Paper 13 candidate and you are unsure of how to calculate basic earnings per share, diluted earnings per share, you should revise this topic before it is too late for you. Basic earnings per share. Now, basic earnings per share is calculated by dividing the net profit or loss for the period attributable to the ordinary shareholders by the weighted average number of ordinary shares outstanding during the period. Meaning that the formula is very simple and clear. Always get your net profit or loss attributable to the ordinary shareholders, then divide by the weighted average number of shares outstanding during the period. So that's how we calculate the basic earnings per share. Now we can break this formula down. When you look at the earnings per share, of course, we have to look at the earnings, and when we talk about earnings, here we include all items of incomes and expenses, including tax and non-controlling interests, but we have to exclude the net profit attributable to the preference shareholders, that is including the preference dividends. When it comes to shares, that is your denominator. Here we are interested in the weighted average number of shares during the period. But this number must be adjusted always for all events that change the number of shares during the period. Talk about bonus issue of shares at full market price, rights issue of shares. Now, some complications might arise with bonus issues or rights issues. Here, you don't adjust the number of shares in the same way as with an issue at full market price. Instead, you need to adjust the number of ordinary shares before the event, as if the event occurred at the beginning of the period. Let us look at the effect on EPS of changes in the capital structure. You should know how to calculate the basic earnings per share and how to deal with the related complications. That is all about the issue of shares for cash, bonus issues, and the rights issues. Now, the calculations of basic earnings per share is more complex whenever you have new shares that have been issued during the financial years. Now, shares issued during the financial period should be included in the calculation of your weighted average number of shares. These shares, you include them from the date that the consideration is received for the shares. This is because it is only from that date that the new shares are able to contribute to the earnings of the company. Now, what is the starting point? The starting point of the weighted average number of shares is the shares in issue at the beginning of the period. This is then adjusted for any shares issued during the period to which the time weighting factor must be applied. Now, under the complications, we have what we call issues at full market price. When it comes to issues at full market price, here the cash is received from the shareholder or the investor, and this cash has an impact on the earnings, and consequently, the weighted average calculation needs to be done for the number of shares in issue during the year. Then the other complication is about the bonus issue of shares. When it comes to bonus issue of shares, this simply means the issue of new shares to the existing shareholders without the corresponding increase in cash. Therefore, with the bonus issue of shares, we need to adjust the number of ordinary shares before the event and also restate the earnings per share figure of the previous year. Now, how do we restate the earnings per share figure of the previous year? What you have to do, you get the earnings per share figure of the previous year, then you adjust that earnings per share figure by a factor. And this factor which we use is always to get the number of shares before the bonus issue over the number of shares after the bonus issue. That's how we restate the comparative EPS of the previous year. Now, when it comes to calculating the earnings per share figure of the current year, but in the current year there was a bonus issue of shares. So what you have to do, you have to make sure that you adjust all the number of shares before the bonus issue by a factor, or what we call the bonus fraction. And in this case, the bonus fraction you use is getting the number of shares after the bonus issue over the number of shares before the bonus issue. Meaning that with the bonus issues, there is always need to restate the comparative, and you also have to adjust those number of shares. You adjust them to show that the bonus issue of shares took place at the earliest dates. Then the other complication is about the rights issue of shares. Now, rights issue of shares, this is different from bonus issues because here the existing shareholders get the new shares at a price below the current market value, meaning that these shares are not completely free as with the bonus issues. Calculating EPS is more demanding here because you need to come up with the theoretical ex-rights price first, and then you need to restate the EPS of the previous period and adjust both earnings and number of shares in the current EPS. Maybe, of course, I will solve one complex example where we have rights issue of shares. However, we need to know how do we adjust the earnings per share figure of the previous year. Now here what you have to do, you have to get that earnings per share figure of the previous year, then you adjust it by a fraction, or what we call the rights factor. And that rights factor is getting your theoretical ex-rights price over the actual CAM rights price. By the actual CAM rights price, that is the market price of the shares before the rights issue. Now, still when it comes to the computation of the earnings per share of the current year, but during the year there was a rights issue of shares, you have to adjust all the number of shares before the rights issue by the rights factor. And in this case, the rights factor you use is getting your actual CAM's rights price, which is the market price of the shares before the rights issue, over the theoretical XC rights price. So meaning that still when it comes to rights issue, we have to go back and restate the comparative EPS of the previous year. Then you also have to adjust the number of shares before the rights issue. Diluted earnings per share. Now, dilution will occur if the EPS is reduced as a consequence of potential ordinary shares becoming actual ordinary shares. Now, to dilute, dilution means watering down or reduction in strength. Diluted earnings per share, of course, is calculated by adjusting the net profit due to continuing operations attributable to the ordinary shareholders and then the weighted average number of shares outstanding for the effects of all dilutive potential ordinary shares. Now, potential ordinary shares, those are financial instruments, of course, or any other contract that may entitle its holder to ordinary shares. Now, you have to know how to deal with the effects on EPS of bonus and rights issue, and you should also be always able to calculate the diluted earnings per share. Now, the diluted earnings per share is always calculated where potential ordinary shares have been outstanding during the period, which would cause the EPS to fall if exercised. You can also call them dilutive instruments. Now, the earnings should be adjusted by adding back any cost that will not be incurred once the dilutive instruments have been exercised. Of course, this will include the post-tax interest saved on convertible debts. The number of shares will be adjusted also to take account of the exercise of the dilutive instrument. This means that you have to make adjustments. For the convertible instruments, you have to add the maximum number of shares to be issued in the future. Then for the options, we have to add the number of effectively free shares to be issued when the options are exercised. Now, how would we calculate diluted earnings per share? The formula is still the same as that of the basic earnings per share. However, here we have to make some adjustments for the potential ordinary shares. Of course, we have to do some computations. We have to look at the mathematical part of it, and we see how we can calculate the basic earnings per share as well as the diluted earnings per share, how to deal with the complexities of bonus issues, rights issue, and full market price issues. Let us have a look at these revision questions and we see. So we can start with our first question. Our first revision question is from August 2019, CPA paper 13, that's advanced financial reporting. So this was question 2. Let us have a look at this question and we see. So we have now when you look at part A, prepare a discussion paper on the factors that have shaped financial accounting and reporting in Uganda. That is from that first topic, that is reporting conceptual framework. Then part B is all about what? During the financial ended 30th June 2019, IRAU carried out a supervision review which involved an on-site supervision of all insurance players to ensure that the insurance industry remains financially stable for the purposes of protection of insurance policy holders. This is also from the reporting conceptual framework. Let me see. On 1st June 2019, KIL announced 2 ordinary shares for each share outstanding as at 31st May 2019. So, of course, there was a bonus issue, as we can see. That is 2 ordinary shares for each share outstanding as at 31st May 2019, the bonus issue, and this has not yet been reflected in the financial statements. The following are the KIL's financial statements, extracts for the ended 30th June. So we have 2019 as well as 2018. We have the statement of profit, as you can see. You have your profits for the period for the 2 years, that is 2018 as well as 2019. Statement of financial position, we have that. Current assets, equity and liabilities, current liabilities, and so on. Required draw from your expertise in the financial reporting. Write a memo to the board of KIL advising them on the objectives and functions of IRAU. Comment on KIL's liquidity position for the year ended 30th June 2019. Then determine the basic earnings per share to be reported in the financial statements of KIL for the years ended 30th June 2018, 2019, in accordance with the relevant financial reporting standards. Now, when it comes to computing the basic earnings per share, remember, we need the profits attributable to the ordinary shareholders for the 2 years, that is 2018 and 2019. Where are the profits? You go to the statement of profit or loss, you can see those profit figures. We have that of 2019 as well as that of 2018. So we need to use those profits in the computation of the basic earnings per share. For 2018, it's there. For 2019, it's also there. Then your denominator, of course, that is the weighted average number of shares. So you see, ordinary share capital each shillings 50,000. So this is our share capital. If you want to find out the number of shares the company has, you get the share capital in terms of cash over the price per share, then you get the number of shares. Meaning that originally the company had 21,000 shares. When you get 1,050,000 over 50,000 shillings, so originally the company had 21,000 shares. To get the 21,000 shares, just get the share capital in the statement of financial position over the price per share, which is shillings 50,000. So when you do that, you come to 21,000 shares. However, during the end of 31st May 2019, there was a bonus issue of shares, that is a 2 for each share outstanding. So if you want to get the number of shares as a result of the bonus issue, just get 2 over 1 times the 21,000 shares. When you do that, you get 42,000 shares. Now, when calculating the basic earnings per share, remember we need to get our profits attributed to the ordinary shareholders over the weighted average number of shares during the year. Now, how do we get the weighted average number of shares during the year? This is our working for the computation of the weighted average number of shares. So you always need to come up with a small table which has date, details, the number of shares, the time weighting factor, bonus fraction, and the weighted average. If in the year there was a rights issue of shares, you can also add in another column for the rights factor, but in this case there was no any rights issue of shares, it was just a bonus fraction. Now at the start of that financial year, we have 1st July 2018, the balance brought down, that was 21,000 shares. However, these shares were outstanding for a period of 11 months. So your time weighting factor, that will be 11 over 12. But remember, whenever there is a bonus issue of shares, we have to assume that the bonus issue of shares took place at the earliest date. So any number of shares that exist, those shares have to be adjusted by the bonus fraction. That is getting the number of shares after the bonus issue over the number of shares before the bonus issue. So fraction, that will be 3 over 1 because it was a 2 for each. So meaning that after the bonus issue, there will be 3 shares, but originally before the bonus issue it was 1. When you do that, you get 57,750 shares. Then on 1st June 2019, there was a bonus issue, as we can see, and up here we have seen that the bonus issue of shares resulted into 42,000 shares. So our bonus issue, we have 42,000 shares. When you add the 42 to the originally 21, you come to 63,000 shares. Now 63,000 shares, those are outstanding for a period of 1 month to the reporting date. So the time weighting factor is 1 over 2. Bonus fraction, we don't need to show the bonus fraction because now these shares are after the bonus issue of shares. You come to 5,250 shares. When you add the 5,250 to the 57,750, you come to 63,000 shares. Now, how would we come up with our basic EPS for 2019? Just go and get your profit for the year 2019 over your number of shares, weighted average, which is 63,000 shares. So when you do that, you come to shillings 28,557. That is the basic earnings per share of 2019. Then basic EPS of 2018, originally, that will be the profit for that year over the 21,000 shares. Remember, originally the company had 21,000 shares. So that basic EPS is 114,343. However, because there was a bonus issue of shares, that basic EPS comparative has to be restated, and the EPS of 2018 restated is shown below. So you get that EPS of 2018 times the number of shares before the bonus issue over the number of shares after the bonus issue. So our bonus fraction will be 1 over 3. So you just need to restate this, then you come up with your EPS of 2018 restated. So you see the bonus fraction, when you are calculating the current EPS, the bonus fraction is the number of shares after the bonus issue over the number of shares before the bonus issue. Then if you are restating, the fraction will be the number of shares before the bonus issue over the number of shares after the bonus issue. So that was the solution for that question 2 of August 2019. That part C about earnings per share, and of course that part carried 6 marks. So that's what you are supposed to do to come up with the 6 marks.